This is Christopher Lewis from the Daily Forex.com trading desk. Taking a look at the upcoming March 12th Forex session in the dollar yen pair. As you can see, we have a couple different lines on this chart. First one here is the 200-day moving average, and the reason that I put that on my chart isn't so much that I am a moving average trader, but rather a lot of people who are trend traders will follow the 200 to define the trend. As I zoom out on this chart, trying to impress upon you how big of a deal going over the 200 can be at times. I mean, you can see that we followed it quite nicely, but we've never really been able to break free of it with any serious strength over the last couple years. As you can see, this most recent break has been much stronger than the ones before, and on top of that, we can conclude that with the and I will switch to the weekly chart here, the downtrend line that I have, the outermost downtrend line is the one I bring to your attention from basically the start of the financial crisis, has been broken as well. So now that I have that set up, another thing that I have done is put a Fibonacci retracement tool on the most recent formation of a downtrend as far as on the major scale that we see at basically 95, where we really kind of accelerated the issues and then went into consolidation and then broke down and went into consolidation here. You have to remember that the 80 level is very important, and the reason being is that it has precedence as being very supportive and then very resistive. This is basic technical analysis, which was what was one support becomes resistance and vice versa. During this time period, we had the Bank of Japan intervene twice, and they couldn't break the 80 mark. So the fact that we have cleared it is indeed a very significant signal, and we also have the weekly trend line break. Now, with the 50% retrace being at 85 and the 85 being the top of the most recent pullback, that makes a natural area of resistance coming up that the market will run to. Using this as a guide, I know where I think the pair wants to go. It doesn't mean that it will, but this is an obvious spot to target. Now, beyond there, I don't know, but there are some reasons to think that perhaps this may be the real deal and we may be in for a trend change. 85 could be the beginning of an attempt to kind of go up, maybe a pullback and then a shot through. Even if we do fail at 85, it doesn't necessarily change everything. It's just more, you'll see this pattern over and over again in a market where we get that and then we eventually break higher. It's that's very common to see, and it happens time and time again in pairs that are fighting a lot of overhead resistance. So it's kind of what my thinking is. But of course, looking at the closer time periods, let me go ahead and zoom in so that we've got some nice candles on the page. Do it one more time. And you can see that Friday's action actually was a nice breakout of a consolidation area, which I identify, for me at least, as a breakout above 80 and then a little bit of a cool down period. You have to have people accumulate. They have to feel confident in order to go long this pair. And the fact that 80 broke, that was a significant event. But people will get leery about false breakouts and such, and a lot of times you'll see consolidation for this exact reason, or pullbacks. In this case, we didn't even get a pullback. We just got consolidation. With the Bank of Japan buying JGBs, Japanese government bonds, it's effectively flooding the market with yen. So it makes sense that this pair rises. And again, even if we were only target 85, that's only 250 pips above. And in the big scheme of things, that's really not a noticeable pullback. As I go to the monthly, you can see that even if we were to go back to here, that's nothing in the big scheme of things, really. If you wanted to take the entire move, you'd be looking at basically the 23. You wouldn't even quite get there. So when you put it in that context, it doesn't really seem like that big of a move. Also, another reason why this is important is you look at the monthly, you get this massive move up, and these ridiculously engulfing candles and the breaking through the tops of shooting stars. They don't happen that often. They normally mean something. So I think the road is clear to the 85. And as such, I will continue to buy on pullbacks. Full disclosure, I am already long in this pair, but I think pullbacks, as long as we can stay above 80, will prove to be buying opportunities going forward to at least 85. And at that point in time, we can reassess the pair.